Some of those student loan types are listed below. We are a direct loan school. So if you have, maybe from your past educational lives when you guys were in school, or maybe with older students or students that are from other schools, you maybe have had to apply for your federal Stafford loans through banks, Wells Fargo or Sallie Mae or other financial institutions, or your credit unions. If you did that, you were working through the FFEL, which is the Federal Family Education Loan Program. We can't work with those federal loans. We work specifically with the William D. Ford Federal Direct Loan Program. That is our Stafford loan program. What that means is we have our system set up so we are working directly with the Department of Education for the student loans. We don't have a middleman, which are the financial institutions involved. So as we're ready to fund the student's loan and they've had their promissory note signed and completed their entrance counseling, we can just draw the money directly in from the Department of Education. So we are a direct loan school. If you're used to going through financial institutions for your Stafford loans, which are the federal loans, then we would not be able to process those. Two types of direct loans that you might have received, and take a look at the award letters to identify which ones you fall under. But if you are awarded a direct subsidized loan, that means that you have a need-based loan, and on this type of loan, there's absolutely positively no interest that will build up against that loan. It's at 0% interest rate while the student is enrolled in school. And it'll continue after the student leaves our school, graduation, transferring, whatnot, that the student will still have a 6-month grace period after they leave school where that loan will continue to be at 0% interest rate. It's at the end of that 6-month grace period that loan will switch to a 5.6% interest rate, and that'll be a fixed interest rate, and that's when they'll start making their monthly payments. Another type of a loan through the direct loan program that they might be awarded is the unsubsidized loan. The unsubsidized loan is an interest, it's a non-need-based loan, and it has interest that will build up on that loan. The interest rate is at 6.8% on that loan. And the interest will start accruing from the day that we fund that student loan. So once we put the money into the student's account, the interest will start building on that loan. And then the student will receive, twice a year, they'll receive a billing statement that will just have the interest only that has built up on the loan. And so they'll get a billing statement and with the interest on it, and then they'll have a decision to make, or you'll have a decision to make, whether you want to pay that interest or not. And I just want to explain what happens if you pay it or if you don't. Let's say you have a $2,000 loan and you get a bill for the interest that's built up of $40. If you elect to pay that billing statement, pay that $40, then the loan will remain at $2,000, and then interest would then accrue against the $2,000 principal balance. But if you get that billing statement and you decide not to make the payment or are unable to make that payment, well, that $40 will then be added to the student loan balance. So now your loan will grow to $2,040, and interest will continue to accrue against that higher balance. So the big thing I want to make sure you're aware of is that if you have the billing statement, please consider making payments and keeping up with that on the unsubsidized loans. Otherwise, your loans will grow, and your student will have a larger loan balance to pay off when they get out of school. When we award our student loans, we will be awarding, in your case, $3,500 in the combination of subsidized or unsubsidized loan, or a combination of both. But there is potentially an additional $2,000 in an additional unsubsidized loan that is available for the student to request. So if you can check with our folks down campus, or check with our office, or check online. If you do need some additional unsubsidized loan funding, we do have some available for your request. Because those additional loans are automatically going to be accruing interest, we did not put them onto the original award letter. So if you're looking for that, they could be available. Another type of loan that might have been awarded to your student, it's another need-based loan. It's called the Perkins loan. This is another very similar to subsidized loans, where it's a 0% interest rate loan, and while the student is enrolled in school. And with this loan, the student will remain at 0% through a 6-month grace period once they leave our school as well. It's at the end of a 9-month grace period that loan would then switch over to a 5% fixed rate. But we have very limited funding. I think we're awarding maximum of $750 for the year. It's a very limited funding award, so we're trying to make sure that we're getting it out to as many people and helping reduce costs with that. Actually, before I talk about Workstudy, if you end up having to go beyond the loans that we have available in the $2,000 unsubsidized loan, we do have a list of alternative loan lenders through private institutions like Sallie Mae and Wells Fargo, but these are private student loans that are directly through their financial institutions. We have a list of them on our website. We will, if you have a different lender that you want us to certify, maybe you're from the state of Minnesota and they have what's called a self loan. That's a private loan through the state. We could look at certifying that for you. We will certify any types of alternative loans that you need us to. But we do have the maximum that we can certify is up to the cost of attendance minus any other aid. Yes?
I just have a question. How long does it take to get back information if you have applied for the Parent Plus loan program? Do you know?
We're looking at sending out a first batch of Parent Plus loans this week. We typically will wait until, we're working on our system trying to get that in place, all of the sending, exporting type of functions. So I believe our first batch will be going out later this week. And then when we send it out, we're going to send it to the COD, which is the Department of Education's website for approval purposes. They're just going to look at your credit report, and as long as you don't have 90-day delinquencies out there, then they're going to approve it. But the flip side, too, is if you do have poor credit, and this is just a general comment, if you do have poor credit and you are denied for a Parent Plus loan, then your student would then have eligibility for an additional $4,000 in unsubsidized loans if you're looking at different ways to make ends meet. So even if you have poor credit or credit issues going on, it might still be worth your effort to apply for the Parent Plus loan. But then the student, subsequent to us getting the denial, would then come in and they'd have to notify us and say, yep, my parent was denied for the Parent Plus loan. Please set up my additional $4,000 unsubsidized loan. But we should be sending them out. I kind of digressed on you, sorry. So, yes? Like Chris, I only know financial aid, so everything else is her world. And worst case scenario, we'll be there tomorrow too. We work all summer, so.